welcome back. Hard to believe we're getting close to the end of this segment of 30 ways you can get started in real estate investing. And today we are here with option number 26, which starts with the word opportunity. And this is actually opportunity zones. Now, what are opportunity zones, you might ask? Now, these are specifically designated areas that were part of the Tax Cuts and Jobs Act that was signed into law by President Trump in late 2017. And kind of a quick little, just general overview is that there's just thousands of these OZs or opportunity zones throughout the United States that were, shall we say, designated needing some maybe some uplift in the area. Maybe these were areas of downtown that maybe needs some revitalization. Maybe, there's some failing infrastructure. Maybe there was a lot of dilapidated buildings that, just isn't feasible to refurbish these or get these, up to code, that you have to look at demolishing them and maybe building new, whether it's I don't know, new high-rise apartment, assisted living facility, whatever the case may be. But generally speaking, these are tax-favored areas that investors can invest in, that the, shall we say, hope is to revitalize some depressed real estate areas or real estate markets or little even pockets throughout the United States. And like I said, these are throughout the United States in all 50 states. And I believe there's even some opportunity zones in some of the territories like Puerto Rico, for instance. Now, like I mentioned, these are specifically tax favored, and you want to make sure that you work with a certified public accountant, your maybe even tax attorney or wealth strategist, or basically a certified advisor that knows the ins and outs of these opportunity zones. Believe me, I am far from expert in this. I have not invested in this, particularly because who it's geared towards and where it can be the most beneficial for doesn't really apply to me. But I'm going to give you just a few little tidbits as to what makes the opportunity zones so unique. So, we could give a host of options or plays out there, but, maybe let's just say, are you one of those that invested in Bitcoin when it was $1 a coin? And now I think as of this recording, it's around, give or take, about 40,000 a coin. I mean, that's one heck of a profit if you happen to be one of the lucky ones to get in on Bitcoin or whatever cryptocurrency it is for, just an insanely low price. And now it's worth a lot more. Or maybe you invested in a startup like PayPal or Facebook, like Peter Thiel did. And maybe you didn't have the foresight to do that investment in a traditional or Roth retirement account, where those gains would be tax deferred or potentially tax free in a Roth account. Maybe you got in on Boeing when it crashed to under $80 a share in March of 2020, or maybe, picked up some great buys with the flash crash a number of years ago, or, back to the dollar portion here. Ford stock was trading as low as $1 back during the Great Recession. And now last I checked, I think it's around $20 a share. Don't quote me on that. I personally haven't invested in Ford for years, but that's just another, kind of an extreme movement, if we would say, if you happen to get into Bitcoin, maybe some stock holdings, maybe a syndication, a private company, a startup, whatever the case may be. And, just throwing out round numbers, maybe for every dollar you've invested, it's grown to $100. What 10x, as Grant Cardone would say, a 10x gain, it's 10 times 10, or a 100x gain. Every dollar you put in is now worth $100. But let's just say maybe that investment's run its course, maybe whatever, you're worried about the regulations that are coming down with Bitcoin or whatever cryptocurrency there is. Maybe you invested in a startup and now it's matured, and maybe it's already IPO'd and you can sell the shares now. Maybe you started through one of my favorite platforms is Start Engine. Maybe you invested in a private company and it's about to go public, or maybe it has gone public. But regardless, you're looking at a large capital gain, or in the tax world, IRS world, this is called an unrealized gain. And you're looking at this, it's like, well, for whatever reason, maybe you're worried about taxes going up, maybe you're in a higher marginal tax bracket, depending on your tax situation. This profit of $99, that could be subject to anywhere from a 15% tax. Maybe it's a short-term gain. Maybe it's a 30% tax or more. Cryptocurrencies, like I said, everyone's tax situation is different, but that's going to be taxed more at ordinary income levels versus the preferred tax rates of long-term capital gains, even dividends of around 15%. So the opportunity zones were created to essentially move those funds. And I'm just using round numbers here. Let's just say, whatever, you bought Bitcoin, you bought Ford stock, whatever the case may be. And for every $1 of seed money or $1 of investment you put in, you're sitting at $100 gain or a $99 profit. And I'm just putting round numbers here. Maybe you were so inclined and maybe you picked great company, great crypto, great stock, that you put in maybe $1,000, and now that's gone to $100,000. Again, like I said, this can parlay into various investments, but the point is that you're sitting on a large unrealized capital gain. And again, like I said, myself, I have not invested in this path because a lot of my investments are either in traditional retirement accounts or in my buy and hold real estate portfolio, where I'm just looking at keeping, maybe trading up through a 1031 exchange, or like I'm going to be doing, and I talked about in earlier videos in my last newsletter, doing a cash out refinance and pulling out 6 figures to invest in other properties. So for my personal situation, again, everyone's different, but for my personal situation, this really wouldn't apply or be as beneficial to me. But again, talk to your CPA, look at your investments, look at your holdings. Are you sitting on some large unrealized gains that you're looking at? It's like, well, if I were to just sell these, I'm going to be hit with a large tax bill. Is there a way to legally minimize that tax bill, or maybe eliminate it entirely? So the whole concept of the opportunity zones was to basically sell and move these proceeds from your crypto holdings, your stock holdings, whatever the case may be, to an OZ, or an opportunity zone. And with the opportunity zone, again, this has to be a designated opportunity zone or an opportunity zone fund. You can't just say, I'm going to invest in that dilapidated hotel and turn it into a condominium. There's very strict rules and regulations, and I know you have to have a management team, or like I said, opportunity zone fund, in order to partake in this tax treatment. Maybe just simple, Google opportunity zones, opportunity zone investment options. Depending on where you live, you might even be able to reach out to your local city government, economic development, or EDA. They might even have some information on opportunity zones that you can invest in right there. But the point is, essentially, let's just say this individual had $1,000 and it grew to $100,000, sitting on a $99,000 unrealized capital gain. We're talking about a significant tax hit. So whether that was in crypto, stocks, whatever, that 100,000 then gets invested into an opportunity zone. And now I don't know all the, shall we say, steps involved in this. Like I said, I'm certainly not an expert in this, but if you work with a qualified advisor, CPA, make sure this is in a regulated opportunity zone, you could potentially invest that $100,000 in that opportunity zone. And I believe the cutoff period is 10 years, that if you invest in the opportunity zone, now again, every investment, there's risk of loss, so be sure to do your due diligence. But if that $100,000 goes in the opportunity zone, and let's just even say we're looking at just a small 2x, maybe that $100,000 grows to $200,000. So now we've essentially turned $1,000 into a $200,000 growth. And follow all the rules, follow all the regulations. Again, work with a certified financial planner or CPA, or someone that's a lot more knowledgeable than me in this area. But you could potentially defer those gains into an opportunity zone, and provided those funds stay invested for the recommended period, like I said, I believe it's 10 years in a qualified opportunity zone, then that full $200,000 could be tax-free for you. All those taxes that were deferred from the original investment to the opportunity zone, gone, tax-free. Again, this was an incentive passed by Congress, signed into law by former President Trump to bring in needed investment dollars, private equity, public money versus, government money or taxpayer money, an incentive to, push up distressed real estate, revitalize some downtown areas, kind of the old adage, a rising tide lifts all boats, revitalizing downtown, maybe improve the property value, improve the property in general, could lead to higher property taxes for the local governments and jurisdiction. So, Tom Wheelwright has always said best, the tax code is nothing but a roadmap of incentives to do what the government wants you to do and legally reap the benefits to pay less in taxes or possibly pay no taxes on your capital gains, your income. Again, if you're a Bernie Sanders or an AOC, this might be a little bit sour pill to swallow, but this is all legal. This is all blessed by the IRS and the tax code. So again, in closing, for way number 26, feel free to research into this. If you're sitting on an investment, like I said, a crypto, stock, real estate, whatever the case may be, and you've talked to your accountant, maybe you've depleted all your depreciation, maybe you're sitting on a large unrealized unrealized capital gain for a large tax bill cut. Look into opportunity zones or an opportunity zone fund. This may be an option for you to first defer those taxes and make sure all your I's are dotted, T's are crossed, make sure you follow all the regulations, all the timelines that are spelled out in the tax code, and that could potentially be a tax-free profit for you. So, like I said, I'm not an accountant, I'm not a CFP or any other acronym by any stretch of the means. This is just quick and brief. In closing, another option or a way to get started in real estate investing that you may not have heard about. So be sure to hit that subscribe button as we finish up video number 26. And like I mentioned, there are still 4 more videos coming out that will be released daily for April, which is Financial Literacy Month. Take care.